Welcome to another podcast of Adeel Pirzada podcast. Today, as usual, your host Adeel Pirzada with Mr. Kevin Padillo. How are you doing, Kevin?
Hey, I'm doing nice and relaxed today. Happy
Good.
to be here.
Yeah. Happy Friday, everyone, and we hope that you guys had a wonderful week. We had an amazing week and a lot of work and a lot of progress. So good things are happening. Today, our podcast is the number 5 and the final episode of building semi-detached or duplex home. It's going to be another exciting episode. And if you guys have any questions, please do hit us in comments. Do hit the like button because it will help. It'll help with other people learning what we're trying to educate and trying to spread.
Yeah.
So if you find this beneficial, please do share, hit the like button. If you have any questions, do let us know.
Yeah, 100%. I'm glad that we brought that up early. If you're listening to us for the first time, maybe you clicked us, you found us somewhere, maybe you've been watching us on LinkedIn and this is the very first time you've seen us. My name's Kevin and this is Adeel, and Adeel is the principal CEO of the Pircon group. We do commercial construction and we do multifamily construction as well. And we like to go live every Friday on construction, on real estate, on business, sometimes interviewing different business owners. So this is what we do every Friday, and glad to have you here. And if you have any questions, like Adeel said, feel free to reach out. Our contact info is down below.
Yes, sir. Okay, so today, like I said, is the 5th and final. For some reason, I think it should have been the first because it is the most important thing about any project, which is funding, right? Capital. Where's the money at? So this episode is about the money that you're going to need for your duplex project. Just starting with, before I get into it, Kevin, do you have any questions? Do you have anything on the surface that you want to ask?
Yeah, it's funny how this is first, this is last, but I think it should be first. What do you think, or one of the firsts?
It is the first, but I mean, it's the last thing you kind of need. Listen, it really depends. If you're doing this for the first time, I would say this should be the first thing because you don't know where you don't know what you're going to get, what you're going to get approved for, and how it's all going to work. But if this is your third, fourth, fifth, then maybe it is your last on the agenda, right, to take care of before you actually can start. And even then, for those people, might be the first. The reason why we kind of pushed it to the end is because we wanted to get through the real process first, right? Which is you're finding, designing, building, and the funding is like kind of separated from those, which it is the most important thing, but it is separated for those. Yeah. And you don't really get the funding for a project until you get to start the project. So it is like the most final thing in your project just before you start it up, right? It's not like you think about a land and you get the money from somewhere. You don't. You have to do everything that we have discussed and then you get the money. So it is kind of last in the process that way. But yeah, if it was my first or second, if I was doing this, I would want to get around the funding at least. I want to hit the water, touch the surface, see what's like, what I'm going to get, what kind of interest rate and all that stuff. So you would want to start the process with maybe when you're at the designing stage, right? You want to make sure you find the land first. But yeah, for some experienced developer, maybe it's not a big worry. So
yeah, maybe you're already rich and you already got that money.
Yeah, maybe you don't need the funding. Maybe you got the family capital sitting somewhere and then you can just deploy that.
Yeah. So maybe if you're wondering why we talk about duplexes, Adeel has built many duplexes and new homes as well. We have a residential division that we do some construction in that area. Also, we have a couple bigger projects. Don't want to share too much at the moment, but we do have a bigger multifamily development, 16 unit projects that Adeel is spearheading. And so we have so many exciting things in the residential space happening that
Yeah, some
I'm
of the
excited to
stuff
learn
we're
as we
working
go.
on even bigger, even in hundreds
Yeah.
of units. But the reason why we wanted to talk about Duplex is because we want to have our message reach to basically anyone.
Yep.
And anyone basically can get up and do this. And I really mean anyone. You don't need a whole lot of money. Anything more than that, you need a proper setup, you need a proper companies, and you need a proper experience as well, because then it gets really out of hand. So yeah, anything with multifamily, you need to be somewhat experienced dealing with that, because there is a lot of things are linked when it comes to designing, when it comes to building, when it comes to finding the lot, when it comes to even finding the right people, which I mean, it's still the same process, but like I said, you should be more experienced. So we wanted to start because we want to help people, and also we want to start with something very basic, and then maybe we'll work our way up all the way to very complex and bigger stuff. So this was like kind of first in the line. It's not a single family, so it is somewhat more skilled and more powered. But again, it's not a multifamily. And like Kevin said, we're working on some projects that are way bigger in size and value. And I don't think we want to get people confused with what exactly we're doing, because you need to have a lot of information on that stuff. So if you do a couple of these, maybe we're there. And with our podcast, maybe we're there at that time, and then you can listen to us about how to build multifamily.
Yeah. So Adeel, how is first question that I have for you here? How much money should you budget for the full development of this project?
Honestly, the cost, and we all know for construction, it varies with different times and market and areas, and also what you're building, right? What specs are you going to build? Is it a high end or low end? So it's all over the place. You can't really, until you have the design or whatnot, and then it differs from places to places, from cities to cities. So this is what you need. You need all those four things, that the 4 episodes that we have discussed. So find a lot. So you have once you find the lot, you have the cost of the land, right? And then you're going to go through the process of permits. So you need to get that cost. Then you're going to go through the process of building permits. You need to know. So you can find all these costs at first by having those teams engaged, right? And let's say, and that's where you need a consultant. So this is a question to be asked based on the lot. So let's say if we were your consultant, you liked an area, you liked a property, we would be able to tell you at that time what we're looking at for your costs. So we would do a quick analysis on the land, on the basically on the neighborhood, then on the lot, then on the street. We'll do a feasibility kind of scenario. We'll run the feasibility calculations and see, okay, first of all, if the project makes sense, and if it does, at what cost, and what would be your cost of designing and construction. So that's where you would more find out about what the cost will be by having a professional involved, and they can give you some view of the cost. But in order to get a real cost, you kind of have to go get into the process and do a few things in order to find out what it's really going to be.
Yeah, I think that's really key about having a design first. People ask about their budget. Oh, how much should I budget? But do you want something nice, ugly? Do you want affordable housing? Do you want to build, just a random house in Forest Lawn? What is? You have to really envision it and put it on paper and design it first to really get a budget.
Yeah, and just to give you an idea, how you can start and even think about it, is, hey, this is how you would do it. So it kind of happens at the time you're looking for a piece of land for your lot. So let's say you point out a neighborhood. Let's say Crescent Heights. Okay, you like the neighborhood. You found a property, right? And you found something for whatever price. How you would do it is that at the very first glance, you want to see what is the cost of sale, what is the price duplexes are selling in that market, in that area, right? So you look at, let's say, Crescent Hills, a duplex, so one side sells for $1 million, So you can say, okay, the total project is $2 million in cost, because $1 million each that I sell. Now everything has to happen within that cost. So that would be your first overview of the cost. Okay, now if you look at, okay, now you can see, okay, the land is being sold 500,000. Maybe I wouldn't think Crescent right now it would be selling somewhere 700,000-800,000. So you take the piece of land, and then you can, like I said, then that's where you can approach professionals like us and consultants, and then you can have the further discussion. This is the piece of land. This is what I like to do, and then they can give you that, right? And they can check few things, and they can say, okay, we're looking this much cost. So that's what you would find out. But again, depends on the market, depends what you're building, depends on the lot. Your cost is going to vary, right?
Yeah.
Some areas maybe you can, do the whole project for 1.5 million. Some areas you can't even do it for 3 million. So it really depends, and what you're building for and who you're building for. That matters a lot too.
What are ways you can fund your project?
So since this is a construction project, basically, it's a little different, and I actually want to give you more than what funding you'll get. I want to actually tell you how you would do it if you were to do it. So the way to do it, especially with duplexes, the safe way, the best way to do it is that you find a neighborhood and you find a piece of land that you have liked. Then you find that you got the right zoning, right? And then if you have the right zoning, and this whole episode we've been doing is not discussing the zoning change. That would be something else. So this whole series that we're doing, it's considering the zoning is the same. So you have this right zoning. Now, this is the time actually you want to go to a regular conventional lender and get a mortgage just for the house. So you may want to put 10%, 20% down. You can do whatever is allowed with the bank and conventionally buy the house. Well, maybe with a high ratio mortgage and, have the mortgage insurer involved. But I would recommend 20% down payment and 80% loan to value. This is what you get from the bank. Now you own that piece of house. And what I recommend, that house, you find something that there's already a house, and then you can actually use the house. So you may move into the house or you can rent it out. Right? That way, for the time then you're doing your planning and your drawings and your permits, your cost is less for holding that piece of property. So own the house first with having the mortgage in place and just a regular mortgage like you would buy for any other home. And why I recommend 20% down payment, it would reduce a lot of costs. Because at the end of the day, that loan, you have to get out of it, is going to expire. Or you have to get out of it because you need to do a development and you're building completely different. So if you put more down payment, and I wouldn't recommend doing this if you don't have money in the pocket, you got to have something, right? So you got to have some money. Maybe you can round it up with other people, but you got to have money. And when you're putting money in a project like that, you don't want to have anything less than 20% equity. So you want to have minimum 20% equity, at least on the land. So land, let's say it's 500,000, 600,000. If there is a house on it, you don't have to purchase it on cash. You can actually get a mortgage, get a 20% down mortgage, and actually get the house rented. So you can do this whole development area. So that's first phase of getting your lending, which is basically getting the lending for the lot. Now, the second phase of your funding is going to actually getting the lot free out of that first lender, and then the construction money that you're going to need. For that, there's a couple ways to do that, but based on what I already recommended, this is what you would do. You would have your plans ready. You would have your permits ready. And then you go to actually a lender and you go tell them that you own this piece of property that you already own and you would like to build a duplex on it. Okay. And the easiest way to do that is that you say you're going to live in one side of it and you're going to rent out the other. Okay. So that way you get somewhat better interest rate because this becomes your primary residence. And then you can get the one side and then you can actually move in. Okay, if if you're gonna do basically, and then there is, what's the term, Kevin? When you actually kind of live like it's done in a bird situation too. You actually kind of move in the house. You live there, right? Becomes your primary residence, and you can now sell or rent the other half. And you know what? Down the road, you can sell the whole thing. You can sell both sides, and you maybe do the same process again with another property. So that would be the best way to kind of handle it. Now you could also have a cash, right, and get the land. So let's say if it's a piece of land, you're not going to be able to get financing very easily. So if it's just an empty piece of land vacant, you need some works to be done in order for a lender to be interested, right? So you got to have for sure the right zoning, because if you don't have the right zoning, the lender won't even look at it. You got to have the right zoning and maybe somewhat plans or somewhat you're into this transaction in a way where a lender can believe that you're actually going to do it. Then they might give you 50% or 60% loan. Otherwise, with the land, it becomes pretty tough. So the ones that are about to do this for the first time, I recommend you not even get into the land, because you could have delays in the process, then you're really hooked up with all the prices and the cost. So if this is a piece of property that's already there, get the mortgage and then get the process started. And during your process, when you have somewhat drawings and you have somewhat work to be done in this, then you can actually approach a lender and have a lender involved. Now, there's two ways. So one way was that having you moving into the property, so calling it a primary residence for you, moving in one, and then have the sell or the lease the other one. Or you could actually go to directly to a lender. And any conventional, big five, whatever lenders that we have, they would happily do that. And you could also get an insurance loan on that, meaning you can put very little down payment and then get insurance involved, like CMHC, and then they'll do your loan. But again, I would recommend, even for your bigger loan, do a 20% equity. Don't get an insurance loan. Insurance is high, and then it just doesn't make the purpose. On such a small deal, it doesn't make the sense. And let's say you walk to RBC or Scotiabank, and they would be happily give you a loan for 20% down payment, equity in the house, and then they'll give you money to purchase a lot back from you, basically, and put it under that one loan, and then also give you money for construction. Yeah, so that's a long summary of something very complex, and it requires a lot more work than I just spit it out. There is a whole lot into it. I think we could have a 1 hour long podcast, and I wouldn't be done the things to look at in the lending side of the things. But just on the summary, on a quick summary, I would say quite long summary of something really huge topic. That's how you would do it.
Wonderful. So Adeel shared some two key things. How much money should you budget? You need to have a good design first, so you can see how much you can budget based on your design, and also
based on the area. What's selling in the area? You don't want to get a lot for $800,000. Build a duplex that's, let's say, I don't know, $500,000 each, and it just doesn't work. Like it depends on your area. Or you don't want to get a lot for $300,000 and end up building a $2 million house on it.
Yeah,
doesn't make sense.
That total cost would be so crazy.
Yeah, it would depend. Your cost at the end is obviously your construction cost. There's a minimum cost, maximum cost, but it depends on your area. That's where you would start. So you look at comparables. So you say, okay, a duplex in this area sells for $1 million. It makes sense for me that I can buy a lot for $500,000. That would be amazing, right? So start with that.
So would it be normally buy whatever is half of it you could sell it for? Is that how your formula is?
No, I haven't really come up with a formula. I think I should. I possibly could, depending on what percentage.
Or you buy it for like 20% of what you should sell it for, and you design it for $1 million.
It's going to be more than that. But I mean, Yeah, I just know the market so well, so it's very easy for me to do the math. There isn't really a number. I mean,
Yeah.
yeah, I would say you're spending. There is a per square foot price, so you could look at it kind of per square foot way and then say, okay, well, let's say each. I'll just give you an example scenario. Let's say you buy a lot for 500,000, and then each side, so each duplex ends up costing you, especially right now where the market is at, maybe 400,000 each side. So you're 800,000 in your construction. So now you're at 1.3 million total into the project, and plus you're going to have holding cost and other fees, and obviously your design and maintenance and a whole bunch of other stuff, and the realtor fees, right?
You're saying you were buying it for 500 or
So
400.
let's say I get a lot.
100,000 in fees.
Yeah, let's say I get a lot for 500,000 if I'm lucky. Depends where it's marketed, so different. Like if you buy in the south to north to the east to the west, is all different, right? So you get a lot. I'm just giving an example. 500,000, spend maybe 400,000, 700 to 800,000 on construction. You're 1.3 mil into the project, plus another 100,000 that you may need for realtor fees when you sell it, for leasing, for management, for holding costs. So it could be actually a lot more. So you got to really sit with professionals and do that math. So let's say you're at 1.4 million now, and let's say the market supports 900,000 for a sale. So for each side, so you're 1.8. So you got about 400,000 in there as a profit. But yes, these numbers look better when you're talking than you actually do it, because there's so many hidden costs, and you may have maybe you all of a sudden you're spending just under 100,000 because the underground services. So it really depends. That's why the right team matters a lot. The right team when it comes to finding your real estate, right team when it comes to designing, right team when it comes to building, it matters a lot.
That's a really good point, because this week we had a great meeting with a client, and we talked a little bit about something called DSSP, site service plan, basically for your development. And it's good to work with a good team that knows how the services are and can help understand where the services are, and maybe has done services before, because that experience can help you budget along. That's why what Adeel just said about finding the right construction team, finding the right designer, this can help you with your budget, and also they can plan ahead for how much funding you should need as well.
Right. Yeah, exactly. So that matters a lot. But on the surface, this is how it kind of works out with these deals. And I think what I was saying, if you want to do it non-conventional way, is that you could purchase the lot right out, or the land or the house. Let's say you have that kind of money. And then, for your construction, when you go to a lender, because you already have purchased the house, right? You already put your down payment, basically. They will be happily to just give you money for your construction, right? And then you can actually tell them, hey, I'm going to sell both of these. That's my plan. They'll look at it. They'll do an appraisal on it. They'll see, okay, what's the market selling for, what you have for construction, how much you want to spend. So they'll even do a math, and then, if math works, you're making money at the end of the day. They'll happily give you money for construction. Right, but when you don't own the land or the house, then that's the way I would recommend that you could do that, where you put less funds.
Wonderful, everyone. We have talked about getting funding for your project, getting that money in your pocket so you could build, develop, and rent it out or resell your duplex. So we trust that you got some value from this podcast. Hit the like. Hit the subscribe. Please share this with your grandmother and your uncle and auntie. They will enjoy this podcast.
For sure. Yeah, that's a good one. I don't know about uncle or auntie, but grandma for sure.
They can fund your project as well. Maybe they're rich.
Maybe that's how you do it. Maybe that's how you get started. You got someone in the family who got the money, and you're the brains. Well, let's put it together, right? And so you say, hey, I want to do this. You need to support me money. I'll do all the work. And you watch your 5 episodes, you can pretty much half the duplex just based on that.
For sure. Yeah, we just
And we'll help you with the other half. So you come to us, we can help you with the design and the construction, and then we can actually really help you with your project and streamline it for you that it works for your best success, because that's what we do. Yeah.
Perfect, everyone. Thank you for tuning in today. This is the Adeel Pirzada podcast. My name is Kevin. This is Adeel, and have a wonderful day.
Thank you, everyone. Have a good weekend.